This is the Net Group Investments podcast, where we explore a variety of views and insights that investors care about. Hello, I'm Demisha Greater from Net Group Investments Multi-Management. This installment of your market and economic wrap is titled, Stock Market Hits Record Highs as US Earnings Season Unfolds. The S&P 500 notched its 45th all-time high of the year on Friday, closing higher as inflation data remained roughly flat from the prior month. The early signs of a recovery in banking profits helped push the broader market to all-time highs at the end of last week. The S&P 500 closed above 5,800 points for the first time, while the blue-chip Dow also reached an all-time high. This is JP Morgan Chase and Wells Fargo kicked off the third quarter earnings season on a high note. Bank of America, Goldman Sachs, and Johnson & Johnson will report their latest results today before the US market opens, while Morgan Stanley and United Airlines are set to release results tomorrow. Netflix and Procter & Gamble are also scheduled to post earnings this week. Despite the market climbing to new heights, investors remain anxious against a backdrop of closely contested presidential election in 3 weeks. Rising treasury yields, uncertainty about the pace of Federal Reserve policy easing, and escalating geopolitical risks in the Middle East remain a concern. Nonetheless, the US S&P 500 gained 1.5%, Germany's DAX rose 1.3%, and Japan's Nikkei 225 climbed 2.1%. However, the UK's FTSE 100 fell 0.5%. Disappointingly, the local JSE All-Share Index declined this past week. This was, however, in line with the move towards less risky assets, as the conflict in the Middle East escalated and concerns about the health of the global economy intensified. Meanwhile, in a highly anticipated press briefing on Saturday, China's Minister of Finance hinted at more debt issuance amid efforts to shore up the economy, stating the government had a rather large space to increase deficit. Many investors and analysts had been hoping for a new major stimulus package to be unveiled at the briefing. Unfortunately, the stimulus plan has underwhelmed once again. There were hopes for a lot more clarity on the extent of the support for consumers. China's property market crisis has impacted wealth perceptions and resulted in more cautious spending. Essentially, it means many shoppers have held back from splashing out on expensive new handbags or jewelry. Until there's more detail on targeted stimulus measures, gains are likely to be held back. Yesterday in Asian trade, shares of Gucci owner Kering were down 3.6%, while LVMH fell 2.7%, and shares in Burberry and Christian Dior pulled back by 2%. Staying with China, and important for the longer-term global growth dynamics, the tit-for-tat trade tariffs continued last week. China imposed retaliatory tariffs on EU brandy imports after the European Commission announced it had received enough support to impose tariffs of up to 45% on imports of Chinese-made electric vehicles. While China's brandy tariff, which ranges from 30.6% to 39%, will have little impact on the EU, Beijing is considering a tariff hike on imports of large engine vehicles, which would hit the already struggling Germany the hardest, since they exported 1.2 billion worth of such vehicles to China last year. Looking ahead this week, internationally, attention turns to the European Central Bank on Thursday for its interest rate decision, following a 25 basis point cut in September. Markets expect another 25 basis point cut as inflation fell below the ECB's 2% target in September. This despite easing inflation, major Eurozone economies remain under strain. In local developments on electricity reform, the National Transmission Company of South Africa, or the NTCSA, was finally created last week. However, the market remains skeptical that the NTCSA will be allowed to operate truly independently. This is a critical part of the reform process, and the intention of a separate NTCSA is to operate as an independent system market operator so that it manages the liberalisation of the electricity market. On a sad and final note, Dr. Tito Mboweni, former South African Reserve Bank Governor and Minister of Finance, was arguably one of the most consequential economic policymakers in South Africa and drove several significant economic reforms. Mboweni, who retired from active politics in August 2021 following a cabinet reshuffle, passed away after a short illness. He will be greatly missed. We have come to the end of our note. Until next time, do take care from the multi-management team. Nedgroup Collective Investments is an authorized collective investments scheme manager in terms of the Collective Investments Schemes Control Act. Nedgroup Investments does not provide advice on financial products and will only give you factual information. For further details on our funds and to view our terms and conditions, please visit nedgroupinvestments.co.za. Nedgroup Investments. See money differently.